So very good afternoon, friends. Let's quickly take a look at one question from Ind AS one, which will be very handy for you. OMN Limited as a subsidiary MN Limited, OMN Limited provides a loan to MN Limited at 8% interest to be paid annually. The loan is required to be paid whenever demanded back by the holding company OMN Limited. How should the loan be classified in the financial statements of OMN Limited? Will it be any different for MN Limited? This is the question. So the demand feature might be primarily a form of protection or a tax driven feature of the loan. So both parties in this case might expect and also intend that the loan will remain outstanding for the foreseeable future, because that is the transactions between a holding and subsidiary company. So but in this case, so if the instrument is in substance long term in nature, if they believe that it will not be settled anytime soon, then in that case OMN Limited would classify the loan as a NCA, that is non-current asset. But however, OMN will classify the loan as current asset if both the parties intend that it will be repaid within 12 months based on their discussions. And MN Limited will continue to classify the loan as current because it does not have this is very important, this line, it does not have the right to defer repayment for more than 12 months regardless of the intention of both the parties. So the classification of the instrument, it could affect the what will happen if you don't see these questions is you will write in bits and pieces delay and all those things. But this is conclusion line is also very important, because each and every line from Ind AS 1 carries valuable marks. So the classification of the instrument could affect the initial recognition and subsequent measurement as per Ind AS 109, because you would have seen in your test your knowledge 6 as well as your illustrations regarding giving of loan to a subsidiary by the holding company and all those things. So in this case, this might require the entity's management to exercise judgment, which could require disclosure under judgments and estimates. That's it. So if this question comes, what are the key things you should write is the demand feature might be primarily form of protection or tax driven feature. And firstly, OMN might classify it as NCA, then based on the terms and agreements and the discussion between the holding and subsidiary, they will classify current assets if it believes that MN Limited will settle within 12 months, and also MN will settle within 12 months because they cannot defer it, and that's it. And lastly, if you conclude by stating the classification will affect the initial recognition and subsequent measurement, preferably IC has not mentioned it, but give highlight to Ind AS 109, indicating that you fully understood this concept. So that's it. If this question comes, you will score full marks, so make full use of it. Listen carefully and ensure you don't miss out on this easy questions, because once you watch it 2 times, if you revise once now and once on exam morning, you can score it big. Keep going, best wishes.